Quick show today. Just one company, but it's a good one. JSR Corporation, ticker 4187, dropped their interim report, and there's a lot happening in semiconductor materials land.
Yeah, this one's packed. EUV resist raw materials, North American consolidation, a new capital alliance. Let's dig in.
Sales up 15.1% to 20 billion yen. Ordinary profit up 51.2% to 4.59 billion. That's a strong interim print. What's driving it?
2 words, EUV resist. Sales of cutting-edge EUV resist raw materials significantly increased, which actually reverses the declining trend they flagged in their last annual report. RF resist materials also moved from recovering to favorable, so the semiconductor materials cycle is clearly turning for them.
That EUV reversal is the headline, honestly. If EUV demand is accelerating, JSR's positioned well. But they're also making structural moves. What's the Visnex situation?
Right. So Visnex Chemicals, their U.S. joint venture established back in September 2025, is now consolidated into the financials. You can see it on the balance sheet. New subsidiary shares of 298 million yen, goodwill of 3.3 million, and non-controlling interests jumped 198 million to just over a billion yen.
So they're moving from a passive overseas foothold to active North American operational integration. That's meaningful for a company that's been Japan-centric.
Exactly. And on top of that, they've signed a capital and business alliance with Sempo Chemical Research Institute to share high purification tech and manufacturing infrastructure. Investment securities surged 3.34 billion yen to 10.88 billion. That's likely tied to that deal.
Plus, they're putting roughly 10 billion yen into new cutting-edge semiconductor material equipment at the Sakata plant, starting 2026 with completion in 2028.
So you've got 3 things stacking: EUV demand recovering, North American consolidation, and major capacity expansion. That's a company betting big on the semiconductor upcycle.
One thing that caught my eye: they newly flagged the Middle East situation as a macro risk, alongside rising crude oil and raw material prices. For a chemical company, that's a real margin risk if energy costs spike.
Fair point. But they still raised dividends from 66 to 75 yen per share, so management seems confident the demand story outweighs the cost pressure.
Yeah, the dividend hike tells you they're not just talking confidence, they're putting money behind it. Worth watching whether EUV momentum sustains into the second half.
Watch for the Sakata plant CapEx timeline and any updates on the Sempo alliance terms in the next disclosure.
And whether EUV resist volumes keep accelerating. That's the real tell on the semiconductor cycle. See you tomorrow.